Welcome back. In our top business story, private sector deposits with UAE banks rose by nearly 28 billion dirhams for the first 5 months of the year, according to the UAE Central Bank. The surge in deposits is 3 times higher than the increase recorded throughout last year. From 380.3 billion dirhams in 2010, private sector deposits rose to 408.3 billion by the end of May. The data also revealed that government deposits also rose to their highest levels, rising by 25 billion dirhams, off the back of a rise in oil export earnings. Analysts say that these results show a return in confidence to the country's banks and more attractive interest rates. The report also showed that the rise in deposits was mainly attributed to business and industrial units, rising from 354.2 billion at the end of last year to over 380 billion at the end of May. Legal professionals are calling for more data protection laws to protect personal information for consumers across the UAE. According to a local paper, experts claim that in the greater UAE there is not one data protection law and that the country should follow in the footsteps of Qatar, who have recently drafted the first comprehensive privacy law in the Gulf. The new draft law that governs the processing of personal information, and those caught short could face prison and hefty fines. Currently, personal information is protected by a number of confidentiality policies through individual companies, as well as a number of laws that govern business districts such as the DIFC and Healthcare City. The UAE's Telecommunications Regulatory Authority also has guidelines in place to protect data. However, it is email spam and wider breaches of privacy that consumers are not currently protected from. Brazil Foods, the Brazilian food giant, is looking to invest $130 million into a new factory here in the UAE. According to the company's website, the factory will produce 80,000 tons of foods, and the investment will be delivered in 2 phases. It added that the Middle East accounts for nearly 31% of Brazil food exports and currently exports to the UAE, Saudi Arabia, Egypt, Qatar, Bahrain, Iraq, Jordan, Lebanon and Iran. The company currently operates 42 factories and sold over 5.5 million tons of food stuff last year, with net sales of over $14 billion. Regional investors are bracing themselves for a volatile week ahead, following a withdrawal of $50 billion from stocks last week, and investments are going into safe havens such as gold, according to analysts. And with that, let's take a look at the stock indices across the GCC. And in our world business news, Italian Economic Minister Giulio Tremonti repeated his call for common European bonds on Saturday, saying that they would provide the best solution for a Eurozone debt crisis, which he said risked spreading to other countries. Speaking a day after his government adopted a €45.5 billion package of spending cuts and tax hikes, Tremonti made a renewed plea for common debt issuance in the Eurozone. He added that they would not have found themselves in this situation if Eurobonds existed in Europe. He also said Italy does not plan to change its economic growth predictions as a result of its latest austerity plan, with current forecasts indicating economic growth of 1.1% this year and 1.3% in 2012. Meanwhile, economic growth in France ground to a halt in the second quarter of 2011, mainly due to a drop in household consumption, suggesting consumers fear hard times ahead. French Finance Minister François Baroin played down the results, saying it was no surprise after a strong first quarter of 0.9% growth. He said the government's growth targets will not be adjusted in light of the data. It comes after a fresh bout of financial jitters in which €10 billion were wiped off the value of French banks this week over fears about their exposure to Eurozone debt. France joined 3 other countries late Thursday to ban short selling in an effort to quell the market turbulence. And finally, Japan has slashed its economic growth forecast by a full percentage point, reflecting the slump in factory output after March the 11th earthquake. The Japanese government lowered the growth outlook from 1.5% to 0.5% for the fiscal year, bringing it in line with the Bank of Japan's 0.4% forecast made last month. Japan's economic minister, Yaoru Yosanto, says a rising yen, now above 77 to the dollar, and the risk of post-quake energy shortage could continue to cause headwinds for Japan's economy. But the Japanese government still expects Japan's economy to pick up in the next fiscal year, starting in April, growing at a pace of little less than 3%. And before we go, here's a quick overview of the oil, precious metals and currency markets. After that, we have the day's sports news.